Gilbert, last word from you. You have a very clear vision, I think, of the future of money, its characteristics. Stablecoins going to be part of it?
I think a form of stablecoin will, yes, definitely. And it really is there to solve a pain point in the financial system. And maybe it's just for P2P payments, maybe it's just for low value payments, maybe it's for cross-border. We don't know yet. But I think the answer is that the other question is who will be issuing that stablecoin? And the answer to that is most definitely someone who is regulated in line with the jurisdiction, complies cross-border jurisdictions as well. So from a regulatory perspective, they're accepted to be a form of money, but it also would have to work with traditional dollars and pounds and euros, but as well as CBDCs or commercial bank money as well.
And all those forms of money are going to be programmable, right?
If they're DLT based, they'll have the benefit of the features of DLT, and there'll be smart money or programmable money. Yeah.
So this is from Cointelegraph. Look at this, guys. Stable coins to make up 10% of money in the next decade or so. All right, there's a date. June 20th, 2024. Not that long ago. Circle CEO Jeremy Allaire revealed 4 of the biggest reasons he's more optimistic about crypto and stable coins than ever before. And look at this, guys. Stable coins account for 10% of the global economic money over the next 10 years or so. How do we have, for example, a trigger mechanism or a flip of the switch? Look at this. Bold claim. Several factors could trigger, is that the flip of the switch? An exponential expansion in stablecoin adoption over the next 10 years. I want you guys to not get tunnel vision when you hear stablecoins, because as we know, there's global stablecoins. Back to what, Underdog was sharing last week with that book, right, that talks about it's not necessarily just paid to 1-1 ratio for the dollar, but most of the world's largest payment companies are actively using this tech, exploring how to expand their usage and the benefits of public chains. Stablecoins become apparent to everyone. Yeah. All right, now look at this. This is really something. This is, of course, I got to take a pause. This one's 15 minutes, but this is talking about this right here. Circle CEO on how the U.S., that's right, guys, can win the digital currency space race. You have to hear the terminology he mentions. It's 4 years ago. It's a conversation from Davos. But, man, everything he mentions, almost word for word, are in line with what Gilbert Verdian just mentioned from London, from Lisbon, Portugal, Nadine Shakar going to House Democrats a couple weeks ago. Dominic Rodrigo of Securitize mentioned the same thing, and they're all talking the same way. That is more than a coincidence. That is huge. I'm going to take you to that video. Let's go ahead and share this. Let's give you a little bit more background just in case you're just tuning in. And conversation from Davos with Circle founder and CEO Jeremy Allaire, if I'm pronouncing that right, about the rise of stablecoins like USDC, why these technologies will win out as technology advances, and what the U.S. needs to do to stay competitive in a new global financial order. Now, before we play this, I just want to put out a disclaimer, okay? I want you guys to, again, this is no bash on anybody, but even I could do it. You can get what I refer to as crypto tunnel vision, not understanding the bigger picture. When you hear the topic of stable coin, don't look at it from a 1-1 peg to a dollar type of example. Now, in this case, for Circle, yeah. But when you hear these statements, and one of those statements earlier, again, let's just jump back to this for a second, because there's people just tuning in. I get that. Stable coins will make up 10% of money in the next decade. What about the quant connection to this? That's what your key takeaway should be. We're going to play this. I'm telling you flat out, listen to how this gentleman speaks. And if you don't think that he's been hanging around with Gilbert Verdian and has really been pitched the concept of what the Overledger is doing for Web3 and basically a Microsoft for blockchain, the foundation for building on blockchain, I don't know what to tell you. And, RIP to the bug that's in your room. So, with that said, let's go ahead and play this. Here we go.
I hear that you've been excited about regulation of stablecoins. Is that like a hot thing for you right now?
Yeah, absolutely. We're the purveyor of USDC, which is the largest regulated dollar stablecoin in the world, and
rated much higher than Tether, right? Yeah.
yes, I mean it's
quite sort of obvious, right?
it's regulated and fully reserved with Bank of New York Mellon and BlackRock, and and sort of widely used in many applications around the world.
So what's going to happen when things are regulated? How is that going to change the world of commerce, just generally, not just crypto?
Yeah, so I mean, I think, and my interest in particular in the AI topic related to this as well is what we're seeing happen is the building of essentially a new internet-based financial system, and it's an internet-based financial system where value can be exchanged effectively with the same speed and efficiency and cost effectiveness as data. And there are these new networks, blockchain networks, that effectively provide an execution environment for money. And the really powerful thing about this is that in the next few years, we'll reach a point where essentially the marginal cost of moving around money will go to zero. And at the same time, these blockchain networks are essentially trust machines. They provide a way to have trustworthy data, trustworthy transactions, trusted compute, and it's the combination of that, the kind of smart contracts, the programmability of money, and the frictionless movement of money,
right,
that makes this really exciting. And so I think from what becomes possible, well, once these are essentially treated as legal forms of money, which is happening around the world right now,
right.
And you have this kind of infrastructure, it makes it possible effectively for machines to enter into contracts on our behalf. So AI agents that can transact with each other, transact with others over a medium of exchange that is itself machine programmable. And so I'm interested in and looking forward to this convergence of machine intelligence, machine code generation, verifiable data, verifiable compute, and the ability for economic contracts to actually be both generated, executed, and enforced by machines. And I think that's the convergence that I'm excited about here.
So one of the things you might not know about is we co-chair IETF committee on exactly this. So there is now going to be a standard so that you know that it's trustworthy to move things from one network to the other. Because currently it's a source of a lot of fraud, a lot of, like half of the North Korea's ICBM program is
from hacks.
Hacks of stablecoins.
Of bridges.
Of bridges, yeah. So we'll get rid of that, right?
Yeah, so we have something called the cross-chain transfer protocol.
Yeah, which, your protocol is really pretty good.
Which
actually got to make that everywhere,
issue.
right?
Yeah, absolutely.
Yeah. So one of the questions that comes up with the people that I talk to are people like Swift, who are moving to a blockchain-like system. It's a distributed ledger system put on top of their existing system. Well, how does that interact with what your vision is?
Well, I think we're really focused on how to build new fundamental building blocks and protocols for the public internet. So public protocols that are public APIs that any developer who wants to build an application that uses programmable money, that wants to build an application that uses Web3 native primitives, for them to be able to do that in a permissionless way, and to do that on a global basis. So I think our vantage point is just very different. We're looking at this as an internet platform utility that is an open infrastructure for people to build on top of. Underneath, of course, the actual stablecoins are increasingly a highly regulated form of digital fiat money, and so it sort of has kind of bank-like prudential regulation around it. But the actual technology layer is not an infrastructure that's tightly managed and controlled by a small set of private sector actors. It's actually the public internet. And I think we've seen that when you have open networks and open platforms that are widely available, that any developer can build on top of, that we see the most innovation. And so we're just very focused on how to build this as open infrastructure on the internet, as opposed to kind of augmenting and adding on top of kind of legacy closed networks.
Yeah, no, understood. So one of the problems or the concerns that people come up with is that you're not the only person in this game, and the open internet is really the Western internet, and that China, Russia, other entities are building a quite separate internet on top of TCP/IP. But therefore, it's talking about BRICS coins, having a very different thing, which means the dollar wouldn't be a reserve currency the same way anymore. The rules of the road might be different in different countries.
Yeah, I mean, I think this is a critical national security and national economic issue for the United States and certainly for other Western countries. I think that the way I look at it is that we're in a digital currency space race, and the future of currency competition is actually technology competition.
Right.
And what values do we want in that system? Do we want values that are grounded in open, free market, competitive, full access? And I think that's largely what the world wants. And so the United States needs to lead there. It needs to obviously enable the private sector to innovate in this space. And it should be, driving essentially digital dollars like USDC as a major export product around the world, because this essentially has the reach of the internet.
I have to agree with you. It's just like, this is a point of real competition, because you have Belt and Road, you have other sort of initiatives, and those are competition.
Right. And individuals and households will get to choose with their smartphone what global economic system they want to participate in. And so that's a choice people will make. Now, there will be, great firewalls that attempt to enforce a balkanized internet, as there already are. But I believe for most of the world, it will remain open. And in a world that largely remains open, that's a tremendous opportunity for this kind of digital currency competition to take place and to thrive.
So people wonder about sort of a race to the bottom. So I could set up a system that doesn't have quite the overview that, say, the Western system does. It's a little cheaper as a consequence. And wouldn't all the consumers go to that one, even though in the long run it's a bad choice?
Well, I think this comes back to a fundamental attribute of money and the use of money, which is it is grounded in trust. And it is grounded in an individual or an entity's understanding of the fundamental safety and soundness of that instrument. It's why every person in the world would rather hold US dollars than almost any other currency, because they understand that there is, the most creditworthy, relatively speaking, hopefully for a long time.
We hope, yes.
Economy, and so, but that is, there are many dimensions to that trust, and so I don't think it's as simple as here's this cheaper alternative, go use it. I think that digital dollars and other other currencies, digital euros and the like, have network effects, have embedded trust, and I think if you can build the technology infrastructure in a way which is also something that people can depend on and trust as well, that you can certainly have a situation where you can prevail.
Yeah, I mean, so one of the things that as someone who advises some very large sovereign wealth funds and does things like that, I noticed that in 2008 we had a problem, and the problem really at its heart was the math was wrong. We used the wrong distributions in the models so that you could get the head of Lehman out there saying, this is a 26 standard deviation event, which is on the face of it stupid. We don't have events like that. What we have is bad models. And so when you get something that's a very liquid network, where you can move things around, where you can have essentially DeFi, it becomes hard to know that you're doing it right.
Well, this is a fundamental, I wouldn't call it a paradox, but it's one of the really fundamental things about this. Blockchain infrastructure emerged in part as a reaction to the global financial crisis.
Yeah.
Both to establish more sound forms of money, to avoid some of the pitfalls of leverage and fractional reserve banking. And that's actually embedded even in full reserve dollar stablecoins, which do not seek to take money and then rehypothecate it and lend it, but instead hold it in full reserve. But I think importantly is you're going to have, I like to call it the new physics of money. Blockchain networks essentially gives money the physics of internet data. And so when you have the physics of internet data, you're going to have the highest velocity money that the world has ever had, and you're already seeing that. And so I think you're right, with this incredibly high velocity money, doesn't that allow just an unprecedented amount of risk to proliferate? But the flip side is that if done right, everything can be built on provable, verifiable, real-time auditable networks, and you can build, effectively a level of visibility into capital, risk, liquidity, and flows, and you can have a real-time visibility into it that would be unbelievable from a regulatory perspective as well. And so, properly designed, you should be able to have a radically larger financial system, a financial system with significantly more reach than we have today that increases economic velocity, and something that is fundamentally safer.
So I believe that it's possible to build something like what you're saying. But if I look at current high-frequency trading, I see crashes regularly. But the crashes only last for a millisecond, right? What that means, though, is that somehow the equations, the strategies that are being done, which are, mathematical, they're things that ought to be solid, have these bugs, and we're just fortunate that they recover really quickly. So there's worry that as you make that across the entire world and you make the amount of money trading large, you're going to get those sorts of things also. And then the other thing is that, like, you look at high frequency trading, the only people can do it are really, really wealthy people who have special access to the, they're half a millisecond away from the central server that does the resolution. The rest of us just have to live on the crumbs. How can you start? So I believe you about the infrastructure, but then there's this other sort of thing of like what's actually happening and who's able to actually put the resources together to get at it in a competitive way.
Well, there's a lot going on in the on-chain finance space, and even something like an automated market maker, which is an invention of DeFi, allows an individual to basically provide liquidity to what is effectively a market-making strategy that can be very, very sophisticated. You're also actually seeing, AI and crypto convergence in the sense that you're seeing protocols that effectively allow people to pool behind highly sophisticated, automated market-making strategies and effectively fund those almost like an LP funding Citadel or what have you. And so you do have what I would say green shoots of this kind of democratization to access to hyper-efficient market structures.
So one final question, because we're running out of time. So given that there are these concerns about the algorithms and the math, not the infrastructure, how would you start off in a way where we can sort of sandbox this or be cautionary before we sort of release it on the world?
Well, I think it's tricky. Clearly, public blockchains are a public computing surface, and there's just a constant amount of innovation that's happening. So there are options protocols, derivatives protocols, lending protocols, all these things that are being built. And that is the laboratory. That is the sandbox.
Okay, well, I think a lot of people would like to see a smaller sandbox that's a little safer. Thank you very much.
Thank you, Sandy.
How many times we talk about the sandbox, especially when we talked about, Project Enbridge, Project Rosalind, all this stuff, right? So I just want to take a brief moment because we talked about the original Bitcoin white paper earlier and so on. I'm going to pound this home just a little bit more. So the Bitcoin original white paper mentions peer-to-peer cash system. Quant focuses on a peer-to-peer financial system. At the end of the day, why is it all significant? And if you're just tuning in, again, this is pounding home what we shared earlier, which is this right here. Okay, peer-to-peer financial system. This was shared from Gilbert Verdin back, 2019. All right, but more about that. He, shared it before. So there's that. What I'd like to get into is understanding the difference, the real nitty-gritty between the two. Okay, so the breakdown. Bitcoin aims to be a digital replacement course for cash. Focuses on enabling direct electronic transactions between individuals without a bank or other intermediary. Quant, on the other hand, envisions a wider range, of course, of financial applications beyond just, of course, cash. Their peer-to-peer network could facilitate various financial activities, of course, potentially including things like securely transferring other digital assets besides just a single cryptocurrency. Hence why it's blockchain agnostic. How about RTGS and so on? XRPL, things that simply make sense with that. But streamlining international payments, enable interoperability between different blockchains. In short, for all of us, Bitcoin targets a specific function like cash-like transactions, while Quant aims to be a platform for a variety of financial interactions. And I love this analogy. Hear me out. Think of Bitcoin like a digital vending machine for a specific product, for example, cash. Quant, on the other hand, aspires to be a whole online marketplace where you can exchange various products, financial products that is, and services directly with others. Now, everything that's been presented, we're almost completely done with this. I swear, it's quite the outline. I didn't realize it was going to be this long. At the end of the day, check this out. How much money is in the world right now? Total supply and circulation, March 22nd, 2024 report. And what's important to understand is the idea of the money system, but the different types of course, money. Remember how in Quant we talk about M10? Economists divide money into categories based on primarily like how liquid it is. Remember earlier we talked about this whole thing of liquidity? But according to the Federal Reserve Bank of Richmond, the range starts at the narrowest and most liquid with M0, and in the US goes up to the broadest and least liquid, M3. Each M level includes the levels that precede it. So M3 includes M0, M1, and M2. And I did a deep dive in the past about this. The central bank in the United States is the Federal Reserve System, which publishes U.S. currency data based on 3 of the 4 M's. Okay? And of course, it gives you a big breakdown about this. And I've covered this in the past. I don't want to necessarily get into this. But this statement right here, how much money is it actually in the world? Some people have asked that. The total amount of money in the world can be measured and expressed in many different ways. Difficult to get a specific measure. But if you're curious about the total value, which we are, of notes and coins in circulation, the Bank of International Settlements, kind of funny how they're always there, estimated to be 8.275 trillion or 8.28, like it says right here, US dollars across 20 major countries plus the Euro area. That was back in 2021. Of course, there are nearly 200 countries in the world, so this is just a rough estimate. Back to the whole thing of M1 money supply includes money in circulation, traveler's checks, demand deposits, you get the gist, 48.9 trillion as of November 20, 2022. But that publication from Visual Capitalist estimated the total value of the M2 money supply that you guys have been hearing about for the longest time is $82.6 trillion. So, think about what I just mentioned for a brief moment. And in closing, I want you guys to also think about this. You heard this CEO from Circle, USDC, what he was mentioning. Back to the whole thing, obviously, even with this, how stablecoins make up 10% of the money in the next decade or so. The quant connection with this all, guys, that's where I'm going with this. So basically, it's like this. The quant does 10% of that figure. You're going to have, 10% of 83 trillion. that would come out to be 8.3 trillion. What if it was even extremely lowballing that? 1%, right? Well, that would be 830 billion, and that's just from the stable coin side of things. Think about how huge that could basically be. So, with that said, finally, in conclusion, I want you to understand the bigger picture. That's why we did the deep dive tonight. Really huge deep dive. But I want to get your take on some of this stuff, Rue. I'm finally done with my coverage. You know what I mean? You could have done it at the beginning, bro. Anybody tuning in wondering why doesn't this guy Maximus let his guest speak? He wanted to hear all this, so that's what we're doing. And for all you guys, you got a big audience that's going to be waiting for you, man. 530 people to hear what you got tonight for your alpha, man. But I do want to hear what you got in regards to specifically this last bit. I mean, come on, CEO of Circle talking about things. You notice the terminology, his verbiage, if you will, right? Sounds exactly like what Gilbert Verdian has been pitching. You know. Anyway.
Yeah, it's hard for me to comment on that because it gets into some things like, okay, what is money, right? And then, you know, central banks and, you know, what backs our money, and those are like very like complex things. Like, you know, I have certain opinions on, but it's like it really, like when I hear that, it just makes me think more about how Bitcoin is valuable, because if you think of Bitcoin as digital gold, and you know, then like it's way more valuable than a dollar, right? So it's like, okay, then how does Circle or Tether or anything compare to Bitcoin in that aspect? Like, okay, then it makes me think about just liquidity pools, right? And these stable coins being liquidity pools. I see the need for something like a energy web token, where you actually want to back like your money by something. So like when you think of things like Ledger, or I'm sorry, XRP and XDC being like, you know, XDC or XRP being a settlement coin for different CBDCs or different types of assets, and XDC being settlement for trade finance, then you see like, okay, now you got this vehicle for actually backing something that's concretely backed by something. And that's very intriguing to me. But yeah, then I guess that's how I'll address that without getting into issues that I don't know that you want to get into.
No, it's okay. It's like a Forrest Gump moment, and that's all I got to say about that. Right? Anyway.
Exactly.
All right, that's cool. Some of you guys asked what cold storage solution I use. I use this, and it is the Decent wallet. All right. I also, of course, have a Ledger like this. All right. You can get a discount basically from going into the affiliate link, which is in all the live video descriptions and recorded and so on. And for the yahoos that are out there, they're like, this is just a shield. And, you know, we'll fix point this out. And it's a great point. Were you aware that you don't necessarily get a discount link just going straight to the site? No, you actually have to go through a platform like this. So how cool is that? You know, I don't think anybody's complaining about that. But anyway, use the link, get a discount. There's another one here. If you're the type of person you want to get one for you and your, you know, significant other, you can get two of them. They actually have another promotion, which is this, and I think this is cool. You can get an all-in-one card wallet plus backup card package. Interesting. I thought that was cool. And again, one of the main key things I like about the Decent wallet is not having to do the red tape of, you know, jumping through all the hoops for XDC and the custom folder. I mean, Edward Vincent can vouch on that. Some of you guys can too as well in regards to Ledger. That was a pain in the butt. You don't have that problem. You literally open up your phone, it's on your app, track everything that's going on, right? And, you know, saying goes, not your keys, not your crypto. You know the drill. Check it all out, though, if you wish to do so. It is truly the cold storage solution that I use for the most part. There's still some on Ledger that, you know, I kind of split it up on it and so on. So it is what it is. But if I have preference over one, I'm going with this one. A lot easier to use and so on. And some people, even to this day, still ask me which one to use.